One other issue that I think is very important that I've talked a lot about is that obviously if we do look to a future where automation has a big impact, that's a big social problem in terms of people not having jobs. It suggests lots of inequality where lots of people fall behind. But beyond just being those things, it's also a much more holistic economic problem. And that arises because the market economy, or really you can say capitalism itself, is dependent on consumers. You've got to have people that have both the income and the confidence to buy the products and services that are being produced by the economy. If you don't have that, then you run into the scenario where literally businesses don't have enough viable customers out there. You know, whatever they're producing and selling, there aren't enough people to really purchase it. And then you run into the potential for, at best, economic stagnation, where it's really hard to grow the economy in the absence of vibrant market demand. Or worst case, maybe even the potential for kind of a downward deflationary spiral where businesses literally can't find customers and you know, then perhaps begin cutting prices, and then that sort of tips into an outright deflation type spiral. And I think it's interesting that as you look at our current economy, we've seen for years and years very, very low interest rates, even in the presence of low unemployment rates, which is quite unusual in terms of what, you know, I learned when I studied economics in college. So I think you can make an argument that perhaps inequality driven by technology is already producing some unusual effects in the economy, perhaps something along the lines of what Larry Summers has called secular stagnation, or this idea that there are actually too few opportunities out there for businesses to invest in productive endeavors, perhaps because there isn't quite enough demand out there, and as a result, they're kind of sitting on cash, and that may be one of the reasons that we see this these low interest rates and this general kind of stagnation. But the main point I would make is that as this accelerates, I think it is really an important issue for policymakers to think about, and it really does risk the potential for economic growth going forward. Worst case, it even risks, I think, the potential for another crisis. I mean, the 2008 financial crisis, you will recall, started in the United States with the subprime meltdown, when workers in low-wage areas couldn't pay their mortgage. So you can imagine that the impact of automation, if it results in widespread unemployment or low wages, could create something similar in terms of people not being able to pay their debt. So I do think this is a real issue for investors, policymakers, and all the rest of us to also keep in mind going forward, that it is a much bigger problem than just something that affects certain groups of people.